morning, friends. Today is Wednesday, July 20th. I'm Marv Eisen of Timeless Dollar. And starting out today, looking at the economic calendar for July 20th, the only announcement is going to be the existing home sales number. And that estimate is going to be 5.36, and the actual number may come in even lower than that. Moving over to the morning news, here's the reason. Mortgage demand drops to a 22-year low as higher interest rates and inflation crush home buyers. Now, let me translate for you, okay? This is the mortgage, the 30-year mortgage rate for today, okay? A $300,000 rate with a 20% down payment for somebody with a fairly good FICO score, 700 to 719. You're going to be paying 6.524% for your mortgage. Now, let me translate that for you into an actual number. Less than a year ago, mortgage rates were 3.5%, 4%. So what does this number translate to? $9,000 to $10,000 more in interest in the first year. $10,000 more in interest in the first year. Interest, just money out the window, okay? So that's going to put a damper on home sales and consequently mortgage applications. So that is the effect of the mortgage rates going up. Now, what does this have to do with the market? Well, home buying and home sales and home improvement and washers, dryers, and things like that go into a home account for 30% of the consumer economy, 30% of consumer spending. So that's going to put a damper on the economy. Other news, well, let's go over to the actual chart, okay? Now, in the actual chart, the S&P E-mini, this is the chart for yesterday. Of course, I put my trading zone and the prior day's close on my chart always. Today, I want to talk about how to be a better trader by looking at and understanding the big picture. Now, this is one-day chart, so of course we can't get a big picture from this. So I'm going to go to a market chart of the S&P, not the E-mini. This is the actual S&P showing where the S&P has been. Get rid of this. And each candle represents one day's movement. Now, I want to call your attention to the 3 or 4 most recent candles, okay? So the big picture is, it looks like the lows that were put in June were not taken out by the low in July last week. And this is the candle July 14th, okay? So the market put in strong showings for the last several days. Now, what motivated that? And this is a particularly strong candle yesterday. But in looking at the chart, looking at the big picture, what you want to see is, what do you see? Okay, what I see is, market has been trading in a range, and I want to know where the windows are, where the gaps are, okay? And so there's a gap here, and these are the ones that have not closed. There's a gap here that has not closed. This one did close. But in the last several days, there's a gap here, okay? There's a gap from yesterday, Tuesday, to Monday. Look, Monday closed over here, okay? Monday closed right over here at 38.33. Tuesday opened at 38.57, okay? Almost 25 points higher than the previous day's close. So that's a window, a gap that remains open. And why do I take note of this? Because gaps always close. They always close, okay? Sometimes right away. Sometimes it takes a few days, weeks, but they always close. So these are price levels that I'm interested in. Now, notice also the reversal on Monday, okay? Monday, what caused this to reverse? Well, Monday was a strange day because there were some economic reports that came out, financial reports from principally the banks. Goldman Sachs came out with stellar earnings, and the headline was Goldman Sachs crushes it, okay? And there was also a headline on Monday from the earnings Bank of America. Bank of America came out with excellent earnings as well. Now, of course, that's due to, you'd say, interest rates. In the case of Goldman Sachs, it was due to bond trading. But nevertheless, with higher bank earnings, spectacularly higher bank earnings, you would expect the market to go up. It didn't happen. When those earnings reports came out, market faded them. Strange. But that led to additional earnings reports that came out yesterday, Tuesday. Also, banks and the energy sector, very good financial reports. So what happened? Market shot up. Market shot up on good reports on Tuesday. Market went down on good reports on Monday. So what does that tell you? Nothing. It tells you nothing. Only that the market is fickle and it's driven by sentiment. Okay? Sentiment. So let me go back to the one-day chart. Now, this is the chart from yesterday, from Tuesday, July 19th. You want to be a better trader, okay? Let me give you a kernel of advice, okay? Regardless of what you use to trade, whether you use indicators, averages, news reports, talking heads, Jim Cramer, Becky Quick, whomever you listen to, the ultimate arbiter of where prices are going are prices, okay? So in order to be a better trader, you want to be a better tape reader. Tape reading is an old expression, of course. There's no more ticker tapes. But you want to be able to read a price chart. And that basically comes down to reading what prices are telling you, okay? So let's break it down. Let's break it down. You want to be a better trader? You need to be a better tape reader. Now, in the morning yesterday, the market opened over here, 9:30, and notice the chop over here, up and down, up and down, up and down. If you were looking at this from the big picture and you didn't know anything about trading, and somebody said to you, well, and remember, you can't see what's going on, what's in the future. You're just looking over here within the first few minutes of trading. This is a 3-minute chart, and there are 10 points between each horizontal line. Then at around 10 o'clock, market takes a big move up, moves up around 10 points in a 3-minute time frame. Nice trade. Okay. What was the indication of it? Absolutely nothing. Nothing. There's no way to have predicted this candle was going to go up, open up over here and go up to here 10 and do a 10-point range. Nothing would tell you that. But if you are a tape reader, you'd wait to see what happens next, because what you want to look for, hopefully if you could find it, is a trend. The trend is your friend. Now, if you can see a trend, you're beginning to understand what the market is telling you, okay? So look at the next 2 candles, okay? Next 3 candles, actually. The market reverses or pulls back, but where does it pull back to? It doesn't pull back to the bottom of this candle, which opened in the middle of the chop. No, it doesn't. It reverses, but doesn't go all the way down. So here, an experienced tape reader gets the impression that, wow, maybe the market is going to move up, which is a kernel of information. Okay, let's wait a bit further. Market puts in a reverse hammer, okay, right over here, reverse hammer. And that corresponds to an overbought stochastic, actually. So you would think, well, maybe this is the start of a reversal, okay? So we wait a little more, and we see that there is a bit of a pullback again, but again, doesn't go down to take out the previous lows. So the market seems to be looking to move in the upward direction, okay? Are you getting the picture? Look at what the market is telling you. Forget about your stochastics, forget about your indicators or everything else. Just look at what prices are telling you relative to where they've been. Where are they now? Where have they been? And another thing that bears keeping in mind is the length of the candle, okay? Very often, when you see a long candle like this in a short time period, you will see a corresponding candle in the opposite direction, which indicates that The first candle was a stop run, okay? And that stop run was put into effect to entice traders, inexperienced traders, to take a trade to the upside. So an inexperienced trader getting in over here, and then the stop run would bring him back down, and he'd lose 10 points within a few minutes. But look at what the market is telling you. And by, let's see, an hour after the market opened, we can get an indication that, look, prices are steadily moving up. They're not suddenly moving up. They're steadily moving up. And what you want to look for in a trend is slow and steady, slow and steady. And that trend continued upwards. And I won't go into my trading zone. And as you can see, the price is stalled at my trading zone resistance level. I won't go into that for you. You should have you should know what the trading range and the trading zone is for the day, and I can give you those numbers if you go to my site, timelessdollar.com. But the ability to read the prices, read the tape, is what's going to make you a consistently better trader, okay? So that's my video for today. Thanks so much for watching. Trade safely, use lots of patience so you can see what prices are telling you, and I'll see you in my next video. Marv Eisen for Timeless Dollar.